Hello traders, and welcome to today's New York session market review from WM Options. US numbers are pouring in, the world's markets are calmly waiting, and an interest rate decision from the Fed has the potential to stand us all on our heads. It's Wednesday, March 16th, and we're starting in the US. Retail sales declined by 0.1% last month. The Producer Price Index dropped by 0.2%, and first quarter GDP growth estimates have been lowered to 1.9%. Builder sentiment remains steady, even though new home sales from January fell 9.2%. Of course, the consensus is that this evening's FOMC statement will keep interest rates between 0.25%, mainly due to tightening financial conditions and low inflation. Some analysts are worried that core inflation is already above 2%, especially taking into consideration low commodity prices. And with the S&P examining the territory beneath its 10-month moving average, surprises may be in store. Meanwhile, the US dollar has been edging upwards, and European indexes this morning are rising carefully. 2015's financial quarterly employment data is in and showing a gradual 0.3% recovery. In France, February's inflation entered negative territory, with consumer prices down 0.2%. In the UK, the pound has been losing value in anticipation of today's budget report. Wages increased 2.2% in the three-month period that includes January, and Chancellor of the Exchequer George Osborne is expected to announce further budget cuts. Analysts believe that if the wage trend continues, the Bank of England could raise its interest rates as soon as November. And Cyprus today announced an end to its support package agreement with the International Money Fund 2 months ahead of schedule. Chinese economy policymakers' meeting ended overnight with an announcement of a new 5-year plan. Growth targets are set to 6.5% to 7% by 2020. Debt cutting and market reforms have been agreed upon. Prime Minister Li Keqiang has warned of potential job losses in the state sector, but the economy, he said, has little chance of a hard landing. Asian equities were mixed early today, with tech share sell-offs in China and India's Sensex losing 0.64%. The country's central bank is considering its own bond purchasing program, having already bought about $8.5 billion worth of sovereign debt in December. And oil continues to be pressured downwards by OPEC expectations of dropping demand. Futures are still up for now, with Brent at above the $39 mark and WTI just over $37. Most of this is being ascribed to an expected meeting in Qatar next month, in which Russia, Saudi Arabia, and other members are set to agree on an output freeze with or without Iran. February's data actually shows a decline in OPEC output in spite of Iran's re-entry into the supply route. Yesterday's API crude report showed a welcome drop in supplies to 1.5 million barrels from last week's reading of 4.4%. Still ahead, US CPIs and the UK's budget report at noon GMT, US industrial production at 1:15, and the EIA's crude report at 2:30. All these leading up to the Fed's interest rate decision at 6 and policy statement at 6:30. We're expecting that to be quite hawkish, and sentiment may be affected. Then at 10 to midnight, imports, exports, and foreign bond and stock investments from Japan. This was all for us today. We'll see you again tomorrow for our regular London market review. Till then, from WM Options, have a happy trading day.